Hi, my name is Yvonne. I am presenting daily news, analysis and forecast about US stock market in just 8 minutes. So need to go anywhere, just only see my 8 minutes video and become prepare for the day trade. Let's go with the key points of last Friday market. The S&P 500 moved towards the 5,700 level as traders focused on job market data. Nasdaq rallied despite the strong pullback in Apple stock. Dow Jones settled above the resistance at 40,941,000. Gains ground as traders react to the strong non-farm payrolls report. The report indicated that the economy added 177,000 jobs in April, compared to analyst forecast of 130,000. The previous reading was revised from 228,000 to 185,000. From a big picture point of view, the economy continued to create jobs at a robust pace despite trade wars. Unemployment rate remained unchanged at 4.2% in April, in line with analyst consensus. Participation rate increased from 62.5% to 62.6%, while analysts expected that it would stay at 62.5%. Average hourly earnings increased by 3.8% year-over-year, compared to analyst forecast of 3.9%. On Friday, the traders also had a chance to take a look at factory orders report for March. The report indicated that factory orders increased by 4.3% on a month-over-month basis, compared to analyst forecast of 4.5%. Friday rally was broad, and all market sectors moved higher in today's trading session. Currently, SP 500 is trying to settle above the resistance at 5700-5710. In case this attempt is successful, SP 500 will move towards the next resistance level at 5785-5795. Nasdaq also rallies on Friday as traders reacted to job market data. Apple share, which was down by 4.5%, was among the worst performers in the Nasdaq index. The stock pulled back as traders reacted to the quarterly report and worried about the impact of tariffs. In case Nasdaq stays above the 20,000 level, it will head towards the next resistance level at 20,350-20,400. Now we talk about Dow Jones. It's moving higher amid broad rally in the equity markets. Most stocks in the index gained upside momentum, while Apple was the notable loser. If Dow Jones manages to settle above the 41,500 level, it will head towards the resistance level, which is located in the 42,000-42,100 range.
Now talk about the gold forecast and analysis. The gold signals deeper weakness as bearish patterns confirm, targeting $3,027, with key support zones at $3,164 and $3,073 vulnerable to further downside. Consolidated on Friday following bearish signals that triggered both daily and weekly bearish patterns on Friday. The day is set to complete an inside day pattern taking the form of a shooting star candle. That would establish a potentially bearish setup triggered by a drop below today's low of $3,223. Gold continues to trade near the lows of the Friday at the time of this writing. Gold may end the day in a precarious bearish position, below the 20-day MA, now at $3,239. Notice that support around the 20-day line was tested on Friday and the day ended at support of the line. However, a daily close on Friday was below the line would provide a new sign of weakness, suggesting that the bear pennant continuation signal may be ready to continue to the downside. Sellers take control. There are several reasons that selling pressure could accelerate following a drop below Friday low. There is a bear pennant pattern that triggered on Friday, showing a potential target around $3,027. That decline put the price of gold back into a rising trend channel blue pattern. Once that happens, there is the potential to eventually test the other side of the channel. This is particularly a risk when the return into the channel's price range follows a failed bullish breakout, which is the case with gold. Then, there is the failure to retain support at the 20-day MA, which is now in process. Weekly bearish confirmation. The longer-term weekly pattern is also bearish as a reversal of a weekly shooting star candlestick pattern that formed last week triggered this week. A weekly closing today below last week's low of $2,260 will confirm the weekly signal. Since the lower target for gold looks to be around the pennant projection of $3,027, higher price zones may not hold as support. Next potential support at $3,168. Now we talk about the crude oil news and forecast. The crude oil market continues to see a lot of noisy behavior, as the market has to think about the potential slowdown economically, and of course the fact that the nations of OPEC continue to pump out supply. WTI-CL technical analysis. The light sweet crude oil market initially rallied a bit during the course of the early hours on Friday, but the $60 level seems to be a bit of a barrier to overcome. If we can break above $60, then I think the light, sweet crude market will do fairly well and probably start grinding its way back towards the $65 level. If we break down below the bottom of the candlestick for the trading session on Thursday, that would be a very negative sign indeed. But one thing that I do notice is that as we get close to the $60 level and fall below there as well, volume does pick up. So, I certainly think somebody's in there trying to keep this market afloat. Keep in mind that demand for crude oil is a major problem right now with the world slowing down and of course, OPEC still pumping oil out in large quantities. So that, of course, is something to pay close attention to, but we are in the midst of possibly forming a little bit of a double bottom. Brent technical analysis. Markets look very much the same as they had bounced from the $60 level on Thursday and on Friday tried to continue that move, which had fallen a bit. Are we forming a bit of a double bottom at the $60 level in Brent? It's very possible, and this is something that I'm watching. It's also worth noting that the last couple of significant drops have seen a lot of volume on days that we have turned things around. I do believe somebody big out there is trying to keep this market afloat. Again, the question of demand is still a major problem. But at this point in time, it certainly looks like best-case scenario for the crude oil markets is that they end up being somewhat range-bound, and we form a bottoming pattern. We had attempted to do that previously and it failed. So, sooner or later, the buyers come back. Now go for the today's latest news and update which have to be in traders' mind before taking any position. Dollar index slips despite strong jobs report, eyes on Fed and tariffs. The U.S. dollar index DXY edged lower on Friday, trimming earlier losses after April's non-farm payrolls data beat expectations. While the stronger labor market print helped the greenback recover slightly against the euro and yen, the broader downtrend remained intact as traders recalibrated Fed rate cut expectations and weighed the looming impact of tariffs on U.S. growth. Labor market outpaces forecasts, but tariff risks loom. April's non-farm payrolls rose by 177,000, outperforming consensus estimates of 130,000 but down from a downwardly revised 185,000 in March. The unemployment rate held steady at 4.2%, reinforcing a stable employment backdrop. However, analysts cautioned that the data did not yet reflect the economic drag from U.S. tariffs imposed on April 2, with potential downside in job creation expected in coming months. Jeff Schultz of ClearBridge Investments noted that the timing of the data collection, just after tariffs were introduced, means the report may represent a calm before the storm. Traders appeared to share that sentiment, with DXY failing to sustain gains despite the headline beat. Fed rate cut bets eased slightly after payrolls. Following the jobs release, U.S. rate futures trimmed the probability of a June rate cut to 50%, down from around 60% earlier in the week. Markets are now pricing in about 85 basis points of Fed easing for the year, down from 100 bits per second previously. Treasury yields moved higher, with the 10-year note rising over 4 basis points to 4.273% and the 2-year yield climbing to 3.754%. These moves indicate reduced urgency for immediate policy easing, but traders remain cautious given the unresolved tariff situation and its potential drag on economic momentum. Dollar index technical outlook remains fragile. From a technical perspective, DXY remains under pressure, currently holding above a minor pivot at 99.148. A breach of the 98.901 support could accelerate losses toward 97.921. Conversely, a breakout above 100.375 would signal renewed buying interest, with 101.302 as the next upside target. Despite Friday's intraday recovery, the dollar's broader weakness following its April 3-year low suggests limited upside unless new catalysts emerge. Market forecast: DXY eyes Fed and trade clarity for direction. With rate cut bets cooling and April jobs data temporarily bolstering sentiment, DXY could attempt to build a short-term base above 99.00. However, the unresolved US-China tariff dispute and its delayed economic impact remain key downside risks. Until clearer signals emerge from the Fed's upcoming meeting or trade developments, DXY is likely to trade cautiously within its current range. This is the overall setup for today's market, and on this channel you will be getting news, setup and forecast on daily basis. Please subscribe my channel. Thank you very much.